Okay, so people have been asking me lately since I've gone on this little rampage against the banks and conventional financing. Well, Darren, what other ways are there to buy a house if I don't go through a normal bank? Well, there actually are several ways. And over the next few episodes, I'll start talking to you about those different ways. Because there are ways where there are other third parties who will finance. There are multiple ways where the seller can be involved in the financing. So let's start out with what we call all-inclusive trust deed financing. So it's AITD. That is the type of financing where the owner of the home you want to buy already has a loan in place. And they might have equity above that loan, but they have a sizable loan in place that you're essentially going to take over because they're going to do an all-inclusive trust deed, which is it's like a wraparound loan. The seller's going to wrap a privately held loan around their bank-held loan. And the ironic thing is you don't need the bank's approval for this. All you need is that seller to agree. So let's say somebody wants to sell you a $500,000 house and they owe $400,000 to the bank, Chase, Wells Fargo, the conventional type. And then they say, well, okay, Mr. Darren, I'll finance part of this for you by wrapping another $50,000 around this loan. So you're going to owe $450,000. $400,000 to the bank, $50,000 to me. Those two together mean $450,000 in debt, and the difference, that $50,000, is what you put in as a down payment. That's what that seller would take home or take to buy their next property, and the $450,000 would be the amount of debt that you cover. What does that alleviate? It shrinks the down payment you have to come in with. It eliminates the bank approval process. And I'll be honest with you, the banks don't love this process, but I've done it many, many times. It's not illegal. They don't love it because the person who lives in the house and owns the house is not the person they originally loaned the money to. But I'll tell you a secret. If they're getting their payments every month, they usually don't have a problem with anybody. So you make those payments on time, that loan stays in place, this loan stays in place, you own a house for a smaller down payment with no bank application involved, no tax returns involved, no 2 years of check stubs involved. Now what this seller might ask you to do is prove that you can pay for it. But again, as long as you prove you can pay for it, 9 times out of 10, if that seller's willing to do an all-inclusive trust deed, you can buy a house and avoid the bank. And that's the whole idea. Many times the bank is not designed for you to go through their system and purchase a home. So we got to find workarounds. And this is one of several workarounds. That's lesson number 1. The next one's coming up. Stay tuned. I'm Darren Campbell. I'm your real estate mentor. Let's win this banking game. It's the real estate revolution. I'll talk to you soon.